guys. If it's very loud, tell me and I'll turn it down. Sorry.
Turn it up.
Turn it up? Turn it up to 11. Like a normal amp, but it's all the way to 11. Oh, yeah. Guys, it is Monday. It is after 5. Time for After Hours Real Estate. Right. Steve just went haywire on me. My name's Chris. I'm a real estate broker outside of Austin, Texas, in Dripping Springs, Texas. And that's my buddy, Steve. Steve is a recovering mortgage loan originator who now runs the world of fine metals, flashy things. Steve, how are you, dear?
Excellent, sir. How are you doing?
You know what? It's a good day. I feel a lot better than I did last week. Man, I was sick as a dog last week.
It's going around. There's a lot. I mean, I got an email today telling me just be ready. Great. Thanks.
Yeah, great. Guys, the whole point behind this show is to, have a realtor and a lender sit around like they're drinking beers at a bar, and you get to like weigh in on their conversation and listen and post funny comments and stuff. But I'm not drinking a drink today. I forgot to get one. I just have water. Sorry.
I was going for water and then decided I wasn't going to be lame.
I'm texting my wife right now. Babe, are you still in here? Steve said I'm lame because I don't have alcohol.
That's exactly what I said. Exactly what I said.
She said
I poured an exceptionally large glass of wine so I wouldn't have to go back and get more. But I have a nice Malbec here. It's a 2020.
This is one of the ones that your wife won't drink?
No, she will drink these, but unfortunately for her, so will I. So, yes.
Unfortunately for her, that was awesome.
When one's parent sends the wine, you're kind of obligated to share,
Wait, there was a commercial in the 80s that was something like when one's something, but it was like what was that? It was I think an alcohol commercial, and they were trying to be funny. Oh my gosh. I can't think.
I don't know, but I saw a commercial that was very specifically. They were like the Vietnamese have the funniest commercials in the world, and it was this commercial for a cockroach spray. And I'm telling you, if anybody has the chance to look up the Vietnamese cockroach spray commercial, there can't be more than one. And oh my God, it was one of the funniest things I have seen in a really long time. I would go out of my way to watch commercials in the United States if they were this funny.
Okay, well, I mean, look, I cannot let you say that and then not pull it up. Sorry, guys.
It's like this full-sized man in this cockroach spray. And these people are just, I mean, it's so funny. He's really pretending to be a cockroach, for real. You see it?
I don't know if this is it. Cockroach spray commercial?
That's it. Yeah.
We're gonna doctors because I'm
yes, that's true. Why don't you start off with the subjects today, like the 50-year mortgage, and the other one, I'll let you tell the other one too, and I'll come up with the link and send it to you. That's what I'll do.
I don't see it. Yeah, you do that. Yeah, guys. So talk about some stuff happening over the last few days. Let's start off real quick just with mortgage rates today. And I want to give everybody an idea of where they are. And where they are is they are not moving in the least. Actually, they've gone up 0.02 basis points today. 2 basis points. Sorry. So we're still at like 6 3/8, guys. We were down at 6 1/8. The Fed didn't drop rates as far as they said they were going to. They just dropped them 1/4 basis point. So the rates went the other way. We talked about it last week. Anyway, so this is where mortgage rates are. Wait, do you want to talk about mine first or yours?
Mine what?
50-year rates or what you were talking about?
Or the $2,000 that will be given to people?
Yeah, let's talk about 50-year rates first. Okay.
Yeah.
So, guys, this weekend, President Trump decided that he was going to start working on a plan with Pulte, Bill Pulte, who is he? The Fannie Mae guy or housing guy? Housing guy, I believe. Anyway, doesn't matter. They're talking about rolling out 50-year mortgages. Right now, we have basically any year term up to 30, right? Like you can take a 2-year, a 5-year, a 12-year, a 15-year, whatever, up to 30-year. But 30-year has been basically the highest, which is why here on the mortgage rate sheet, you see a 30-year fixed and a 30-year jumbo and a 30-year VA and a 30-year FHA. Okay, you get the point. Talked about rolling out the 50-year, and a lot of people are like, yay, 50-year houses are going to be more affordable because that's the whole point behind it, right? Mr. Babcock, would you like to weigh in on this first? We had a comment from our very own Carolyn before we even got on the air. Can a 60-year-old get a 50-year mortgage rate? And the answer is, if it's available, yeah.
Carolyn, you may not discriminate based on age in the mortgage industry. So the answer to that is it doesn't matter what your age is. If you are above, well, you have to be an adult. So I can discriminate based on 17-year-olds, right, and below. But as soon as you hit 18, I can no longer. Or actually, I'm not a mortgage lender anymore. So let's stop pretending that. Yes, you can. You can.
Yeah. Yeah.
And I would challenge anyone to Google 30-year versus 50-year mortgage payment, because the AI is pretty good right now. And it'll show you that if you're going to buy a $400,000 home and you got a 6% interest rate, your 30-year principal and interest payment, right, is almost $2,400. They say $2,398. Okay, let's just round up the $2. Okay,
let's go to 6%.
So, great. So we're going to round up $2, and we're basically at $2,400 a month.
Oh, you're not putting anything down.
Zero. Well, I don't know what's going on here. This is I'd have to really look into the details here.
Doesn't matter. This is what he's talking about. $400,000.
The AI is giving me the numbers, but
0% down.
What I'm trying to tell you is that the difference in payment between a 50 and a 30-year mortgage is $300.
Okay, and that's what I was going to say. Okay, the next. Oh, it's not going to let me do it on here. Bank
right,
rate.
so that's why I had to go to AI to do it. But if you're using the AI's numbers, it gets you down to a $2,398 payment, so $2,400. Okay, $2,400 payment at a 30-year mortgage. You extend it to 50 years, and you drop your payment by $300
to $2,100.
It's $300. Yes, to $2,105 is what they have. So it's almost exactly $300. It's it's $3 shy.
Affordable. $300 a month is a lot.
Now, Chris, I will challenge you in areas that don't have the high tax rate that we do. So my home, 30-40% of the payment is my tax payment, right? But there are lots of states that do not have huge income or property taxes like we have. Now they have other taxes, of course, right? Everybody makes up for it. You get. There's only two assured things in life, right? Taxes and death, right? But long story short is if your state doesn't have much in terms of property tax, like most people, you pay like $2,000, maybe $3,000 a year, that kind of thing. Then this could be a significant impact on housing and really, really help. And I actually love the idea of a 50-year mortgage. I'm one of the few that really likes it, because I mean, we live in a society where it's a debt-based system. It's a debt-based society. People only care about their payment per month. They don't care about the overall obligation until they get older and realize what they've done to their lives. And quite frankly, I think if you put stipulations on this, like no cash out refinances kind of thing, you'd force people to pay off the mortgage or sell the house. And I think this would be a really great way of getting younger people into homes without having to fork up as much money up front.
Okay, so now I'm going to push back on you. I think this is a horrible idea.
Yeah, most people do. And a lot of economists don't like it either.
You know what? I mean, it's not a horrible idea. It's just that I understand that a lot of our what's the non-terrible way to say this?
Uneducated?
Yeah, look, guys, a majority of the U.S. reads at a 6th grade level. Okay, we have to understand that. And if you can read at a 6th grade level, you probably do math at a 2nd grade level. Just saying, it's just facts. This doesn't add up. This doesn't add up, because here's problems. First of all, you mentioned in a state that has $3,000 taxes. Doesn't matter if you're in that state or in Texas. It's going to save you $300 a month. Doesn't matter. $300.
What I'm trying to say is that in this state, the overall percentage of your mortgage payment is not as affected as it would be in other states.
Yeah. Okay. Now, but here's the thing that I'm really going to push back on you with. Are you, as a former mortgage guy, are you going to tell mortgage companies you have to give a 50-year mortgage? You have to amortize over 50 years.
Is who going to tell mortgage companies they have to do it?
Anybody.
Finish your question and then I'll see if I can answer.
Yeah, you as a loan originator, that doesn't matter. Anyway, anybody, doesn't matter. Is the government going to tell mortgage companies, hey, mortgage company, you're going to give a 50-year amortized loan, period. Okay? You and I have talked for hours on this show about why interest rates go up. So, are you, as the government, going to force a mortgage company to give the exact same interest rate as a 30-year fixed? Because I can go back onto here and I can show you the difference between a 30 and a 15. A 15-year fixed rate has a half point lower interest rate. So what would a 50-year rate have? Would it be a half point higher?
Let me ask you. Pretend for a second from a different point of view. Pretend that you're a foreign government and you're just now being told that the citizens of the United States are going to be indebted for 50 years on their properties, on these brand new instruments that are being sold as mortgage-backed securities, which ultimately get sold as treasuries and bonds. And now, would you like to buy into those bonds? Is a 50-year mortgage and United States citizens being indebted for 50 years more attractive to you or less attractive to you as a foreign investor of debt?
It is more attractive.
Okay. In that case, what do you think would happen to the bond prices, which ultimately affect the interest rates?
The bond prices would go down.
They would go up if they're more attractive. I'd be more interested, right? And when the prices go,
if there's more people buying them, wouldn't they go down? No, I'm thinking supply and demand.
The prices of the bonds go up and then the interest rates go down. No, it's okay. You've got it right. You've got it right. It's a weird market. Okay.
Yeah.
The more people that want to buy them, the more the Fed would raise the interest rates on things. But long story short is it's like kind of two different markets, right? It's kind of an inverse. But I believe this will do good things for interest rates in the long run if it's done. And I think it'll give people options to have lower payments. Now, what I don't like is it adds another 20 years for a measly amount of savings, right? But I don't think I would use it if you were going to live in a home for 50 years, or unless you were such a low income family that you were just barely able to do this, and your only hope was to own the house and pay it off by the time you die so that you can give to your kids and start building generational wealth. That kind of thing, that's still an option, for people that couldn't make it work on the 30-year. The problem is that the mass majority of loans that are done are 30-year loans because it's the lowest payment, because we live in a society where you look at the payment, not what you're actually buying. And so what this will ultimately lead to is most people getting 50-year mortgages. Go ahead.
Right. But I still want to go back to, you had your AI doing it for you. Actually, I'll do it on my calculator on my phone because I was doing it.
I don't like mentioning rates, and I don't like mentioning comments unless I can say how I did it, because I want everyone to know that it is not a promise to lend, even though I'm not a licensed. Well, I hung up my license, so I'm not a mortgage lender anymore. Right. I can certainly answer some questions, but I'm not giving loans anymore. This is not a promise to lend. And, at this point, I'm just a former mortgage lender that can answer questions about how things were when I was lending.
Yeah,
it was just a few months ago.
I'm going right directly into here, and I'm plugging in the Carl's mortgage calculator, which is what I use. And okay, if I plug in today's average interest rate right here, 6.34 at a $400,000 loan over 30 years, that principal and interest alone is going to be $24.86. Okay, $24.86 at today's average interest rate. Now, again, if you go in and say, no, I want to do it over 50 years, that does lower it to $22.06, so $280. But again, that's not the rate you're going to get. You're a higher risk. You're carrying it out for longer. I'm saying. So I'm gonna say that it's the same spread here. We're gonna call it a half percentage point difference. So instead of 6.34, you're gonna get 6.84, and now your principal and interest is 23.57. You save a whopping $100 a month with a 50-year rate or a 50-year note. And then if you go look at, because you mentioned generational wealth, how much effing interest are you going to pay over 50 years?
It also depends on how the loan is set up. Will it include mandatory mortgage insurance, for instance, or will that be covered to a certain degree? What will the down payment look like? Will it be available for all ages, right? Is it only available for first-time home buyers? Is it available for everyone? Is it an FHA product? Is it a conventional product? How will it be rolled out? Will it be Fannie Freddie? Will it be, FM? Oh, I mean, who's gonna be in charge of it? There's so many questions to ask that have not been answered by the one tiny suggestion that Trump tweeted that we might do a 50-year mortgage. So there's, at this point, where there's literally nothing except a tweet, from what I understand.
Well, and Bill Pulte talked about it as well. Like it's evidently it's being explored, and that's from multiple people. But here's the thing that I'm going to talk about it at face level, and then I'm going to go in a little bit deeper. At face level, a 50-year note under those circumstances that I just said, a half percentage point premium over a 30-year fixed, a $400,000 house after 50 years is going to cost you $1.414 million. You're going to pay over $1 million in interest over 50 years. That's not how you build generational wealth, my friend.
No, it's not. No, it is not. However, I would argue that it's better than renting.
Potentially, but again, $100 difference than buying on a 30-year could potentially be better from renting at the same time.
Again, I don't think this is a good long-term product, but I think it's a great short-term product if you're not sure about where the interest rates are going to go.
Okay, and that's fair. But now I want to go a little bit deeper because you were just talking about, well, we don't know what it would look like. We don't know this. We don't know that. Okay. And again, on this show, you and I have gone into depth over and over, and it doesn't matter what political party's doing it. Anytime the government goes, hey, hang on, we're here to help you with this, what happens?
I don't want to talk about that, but what I do want to say is that
time out. So if the government regulates this and like, oh, we're going to put in this safeguard, we're going to offer it from this perspective. No, you can only do it if it's this. No, you have to do it like this. If the government puts all those guardrails on this thing, it's a shit product to begin with. Let's be honest.
I've noticed in my experience that when the government comes in and says we're here to help, it's often a good thing when companies are out of control and need to be regulated. Okay. And it's often a bad thing when the government says we're going to create something from scratch and offer it to people that the free market did not come up with on their own. Right. Because that typically means the free market didn't want it in the first place. But there's plenty of examples of that beyond our government, right? I'm trying to be very, very PC here, can you tell? But I'll tell you, if I were an investor, like a real estate investor, somebody who buys homes and rents them out, you better believe all day long I'm going to use the 50-year mortgage.
Absolutely.
Right. I'm going to have the lowest possible payment. And if the home goes up in value, great. Let's refinance, take some more money out of there, buy another property, and keep the payment as low as humanly possible, so that I can have some cash flow on the property and keep it working for me. So
I mean, it's a great thing for that, because that $1 million you're going to write off as mortgage insurance mortgage insurance reduction anyway.
It's a landlord's dream.
That's right. And a lot of people, they're like, well, I'm a homeowner. I can write off my insurance. Well, some can and some can't. It depends on if you even reach your minimum deduction.
Do me here. Let's do another favor. Let's do a 30-year versus a 50-year payment, but for like a $4 million property.
Holy Jesus.
Right. But then again, it's not going to be, the loan limits won't be that high, will it? They're going to cut you off at some point because it's going to be resident. So I was going to say, if you're buying like an apartment building or something, right? Like that would make a big deal, a big difference.
I would, and I would think that would be some of those limits that are installed by the government going, You can't use this for commercial products. You can't use this for, short-term
Right.
rentals or whatever. Yeah, I'm sure that that's going to be a limitation on it. And I mean, I don't know. As an investor, I'd be like, yeah, please let me use this product. I think it makes more sense for an investment standpoint, and I think if it was put in and allowed investors to use it, I think it would stimulate investment. I don't know, man. Interesting
I don't
thing.
know.
Interesting thing. All right.
I don't know.
Did you find cockroach?
Yes, and I texted it to you.
Okay.
Should I go email?
No, I got it. I'm gonna put it up over here. And
it's a 2.5 minute commercial, but
okay.
again, it's one of the funniest things I've seen in a long time.
Let's see.
You can't hear it, can you?
Can you hear
it? Mm-mm. She says, spray it. So he sprays this guy, and the guy freaks out. He's like, ah! What brand is that? She's like, that thing sucks. It's like, where are you going? Back home. You go tell him how much the spray is trash, right? I don't know if you can hear this or not, but it's hysterical. They're like serious actors. It's brother. They can't hurt you, brother. Keep it going. It's the best at the end. Brother! You have to tell everyone. We're ready, brother. Say it. Don't touch me. You're like, oh, crap.
Holy crap. All right.
I'm sorry, man. I would watch a lot of commercials if they were that funny. Talking trash about the product only to find out later that it like totally worked and don't touch me. Oh my God, that was so funny.
Oh shit. All right. What was the other thing you wanted to talk about? Oh, the $2,000.
With zero viewers left. Yeah. Okay. Yeah. So $2,000. I bet we don't have any viewers left, do we? Oh my goodness gracious.
People
great.
Love
Hi everybody.
Commercials.
Okay. Well, thanks for watching that, which made me laugh earlier. Sticking with us. So, yeah, Trump is talking about a $2,000 refund from all of the tariffs. I'll tell you the truth is, he suggested it at almost the same time that it looks like the Supreme Court is going to reject that the tariffs are something he can do.
Yeah.
So if I'm being honest here, it really looks like he's trying to dangle like candy in front of the kids so that when the Supreme Court says you can't do that, all the kids are going to be like, "Aww," right? Like that really annoying thing they do right now. And so, I feel like he's kind of setting it up that way. He's trying to get all political. I don't know. I usually wouldn't say that on the show, but it really does seem that way. Now, that being said, it's been talked about for months. I think Elon Musk was the one that first suggested it or retweeted it or something. So could happen. I would not want it to happen. Sorry, everyone. I don't want to hold money away from you, but at the same time, you think
Well,
inflation's bad now.
but here's the thing, and I'll be. I read a couple of other things today, and it makes sense to me. First of all, the money's already been it has already been remitted to the U.S. And so even if the Supreme Court goes, yeah, you can't do what you're doing with tariffs. Okay, well, they can't go give it all back because it's
So
like
let me just, yeah.
it's like if the state of Texas, the sales tax. Okay, so HEB sends all the sales tax they collect to the state of Texas. And then the state of Texas goes, no, give it back. And HEB goes, I've got to give it back to all of our customers. Like, how the hell do I do this? And so, from that perspective, I don't know that you can actually put the toothpaste back in the tube with what's already come apart, like with what's already been collected. So,
then use it to pay off debts.
Okay,
I mean, you're literally
disagree.
talking to a family here. Let's use the same analogy. We're talking to a family that owes hundreds of thousands of dollars on credit cards, and they make $40,000 a year.
Yep.
And they've discovered that if they go to HEX, it's cheaper than HEB, and they're going to save $100 a month. And so now they're sitting there holding this $100 that they had allotted, and they say, you know what we should do is we should give it to the kids. The correct answer is you should use it to pay off your debts, right? And by the way, when you give it to the kids, they're guaranteed to get a video game system. And the next month, they're going to ask you for games to play on that gaming system, right? And that's kind of my illustration of inflation, right? It doesn't work that way, but that's pretty much how it works. If you give out all that money, people buy a bunch of stuff, all that stuff isn't available, supply and demand gets shocked, all the prices go up. And then all the prices crash, and then all the prices go way up. And it's artificial, okay? Anything artificial when it comes to economics, it's almost always a shock to a system. It's almost always a bad thing. It's a perverse situation where you edit the demand or the supply, and both have real repercussions.
Carolyn said the commercial was disgusting, but that was worth it.
I thought it was so funny.
And I don't disagree with you. I don't know how to it's like the rebates, the stimulus checks during COVID. Yes, that was stupid. It was stupid.
I mean, a lot of people needed it badly, but we saw what it did to the economy, right? It's not like we don't see the reason for it, right? I mean, we're not heartless, but at the same time, it's like, man, you don't like paying all this higher rent and all this higher, fill in the blank, groceries. Well, then let's not do that again.
Look at what the result was. Oh, we gave you a $5,000 stimulus check. And here we are 5 years later, and inflation is X amount higher. Would it have been better to, not get that check, or are you better off now? I think we all know where that comes from, right? I don't. So, and this is a disconnect that I have. If the government doesn't print the money, does it still cause inflation? I mean, I guess it does, because you're giving money that's going to be put into the system, but it's not printed.
Are you think of it like a balloon with air?
You're adding.
Okay. Right. You're adding air to people's individual balloons.
Yeah, that's fair.
So that's inflation.
Yeah. Yeah. Okay. Fair point. It's just a little bit different than what we normally think of.
So yeah, but where do you think they're really getting that money from? Like, I know what you're saying, but money doesn't actually come from money. Like, it moves. The velocity of money is real, but money itself is not real. And I know that can be really confusing, but our government quite literally prints money out of thin air.
That money,
and I say that because
printed during COVID.
Yeah, well, it's digital. They don't even print it. I mean, they do, but when was the last time you went out and had, spare change in the couch, right?
Yeah.
Or, I mean, nobody uses cash anymore. They're not printing it like they used to.
Right.
Exactly. I mean, if they are, where's it going? Right. If someone had $0 and the next day they have 2,000, it came from the government. And I understand we're saying that it came from tariffs. Okay. I'll tell you, this entire system is just there's a famous quote, and I believe it was from Henry Ford. I can't remember. It was around that era, but it's and I'm going to paraphrase the quote because I'm going to butcher it. In fact, it's probably not even him now that I'm saying it out loud. Of course, I'm screwing up the whole thing. But it was that if people knew what the banking system looked like and how it actually operated, they would riot overnight.
Oh yeah.
And so and the reality is your money's not there; it's gone. I know that when you go there to get your money, it's there. But if honestly, if 10% of the people in the bank went to go take all their money out, right around 9%, they would start running out of money at the average bank. And by the way, go ahead.
We know this. I mean, again, whatever miracle on 34th Street taught us this. Like everybody knows it, but we, for some reason, don't understand it.
Hey, look, then you say, look, well, then they'll just sell off their assets, and you have to wait a month or two, but then you'll get your cash, and that's true.
Yeah.
But if there's ever a crisis and all the banks are selling at once, let's just say like commercial real estate, for instance, which is going to happen. Mark my words, in the next 12 to 24 months, it's all crashing down. We will have a major crisis in commercial mortgage-backed securities. It is at the highest level of delinquency. I think it's a 13% delinquency right now.
Interest rates have stayed too high for too long. Nobody can finance out of their stuff, and all their terms are coming due. Yeah. I mean, it's a real thing. Of course it's happening. And again, people that watch the show know this, but anyway.
Yeah, actually, yeah. And what we do now in the economy will hit us in about 2 years.
Yeah.
On average.
That's always the funniest thing is, talking about presidents, and it's like, I mean, yeah, we'll find out in a while. So everybody, the tariffs are going to destroy us. Well, we'll find out in 2 years, won't we? They're not going to do anything right now.
Yeah,
every analyst that is actually an analyst and not a political talking mouthpiece has told us we have no idea. We've got zero idea.
Yeah, but they also follow the patterns out there, and the truth is, I'm really concerned that gold has been doubled in price in the last, under 2 years. That's scary.
Yeah.
Before the who had all the Mayan gold? The Spanish. Before the Spanish fell, how many times did their gold price double in under a year?
I have no idea. It doubled twice in a year?
After it doubled twice in under a year, so about 2 years and doubling twice, right? They fell as the world power. They had too many debts. Even though they had all these gold, truckloads, I guess, or shiploads of gold coming in, they had overextended their payments to elsewhere, and the debt payments were such that they couldn't keep up. And in that time period, they defaulted, and they defaulted again, and they defaulted a third time. And during that time, the price of gold in their country started skyrocketing. And after 2 doublings of gold, they ceased to be the world trading power, the world the world currency. So doubling in gold is actually quite a bad thing. You'd think in my position, I'd be like, yeah, man, gold's expensive. Let's buy some, right? But no, it's kind of scary.
Yeah, but isn't the value of gold doubling for the entire world?
Yes and no. If you look at everyone else's currency, they all have different prices for gold. And
really,
when I say yes and no, it's a pretty open world. I can go order gold from other countries if I wanted to, right? If it's really cheap over there, then great. In fact, China was trying to swallow up most of our silver last month by asking like $9 over what we were asking for the same silver coins. So a lot of it was shipped out.
So China was making
a lot of it.
An industrialization play.
We've been talking about China and the BRICS nations for, 3 or 4 years now. Before, when they were just mentioning the talks, we started talking about it.
Yeah.
Yeah, they're a power play for sure.
Well, man, I think we've killed enough brain cells today.
Yeah. Yeah, and for those of you that stuck with us the whole time and actually watched the video, I applaud you. Thank you. I appreciate that.
Guys, we do it every Monday. Who knows what next Monday will bring, because I'm sure there's going to be some great news that comes across. CPI numbers are due out this week, aren't they?
I'm not following.
I think on Thursday, and somebody was like, are they going to be ready? Because the government's still not open. So it'll be an interesting week to see what
Not
happens.
only that, though, our government's not releasing their numbers right now. So you remember
Yeah,
we used to talk
now.
about how in the last administration they were lying about their numbers. This administration isn't even releasing the numbers.
Wait, but I thought it was because the government was shut down the last 38 days.
So the other side right now of if you're on the left, you've seen President Trump fire someone that was perceived to be very respected, that ran all the numbers, and then replaced them with somebody who was their own person, who then delayed the numbers. And it just appears very questionable.
Interesting.
Basically, what you and I were complaining about last administration is almost exactly happening in this administration. At least on the surface level, we don't really ever know what's happening beyond what you can see on what people print, right? I'm not there, but at a minimum, we're not getting straight answers right now.
Yeah. That's a fair point. We'll see what happens this week. All right, my friend. I appreciate it.
See you soon.
All right. Talk to you soon.